We'll also discuss some of their plans going forward. Thanks for joining us today, Mr. Sharma, to discuss some of the ongoings there. Now, despite the real estate sector facing headwinds, you've actually managed to deliver a great set of numbers. What do you attribute the growth to, and do you expect the healthy sales momentum to continue going forward?
Good morning. See, as far as this kind of a momentum what you have seen in this last financial year, we do believe that in financial year 19-20 we should be able to sustain and maintain this kind of a momentum. We have been growing almost double digit for last 3 years. Our operational performance in our core market, that is Bangalore, as well as in Kerala and Gurgaon, it has been improving for last couple of years. At the same time, that contracting revenue also we have got good amount of visibility. If you look at from our existing customers, we are supposed to collect almost 5,000 crore as things stand today on the sold inventory. Similarly, we have got an order book of roughly 2,500 crore on our contracts and manufacturing division. We have launched more than 7 million square feet of new projects last year, and we have delivered 5.41 million square feet of projects in the last financial year. More than 3,500 apartments got completed. So the impact of all such things you are seeing in our financial performance, and going forward it looks to us that despite the headwinds and the challenges which this industry is facing, we should be able to sustain this performance.
Right. Now, your margins have been subdued this time around despite the increase in sales and revenue. What is the reason for this, and what, more importantly, is your margin trajectory now?
See, it's a good point. See, as far as the margins are concerned, we need to look at that in the last few years, our ability to pass on any kind of a cost increase, we have not succeeded, industry as a whole. So, while the cost keeps rising, the selling prices we need to keep under control, because that is where today the market is. And in order to ensure that the volume growth is sustained, we have to push the sales with higher marketing cost and the higher input cost. But despite that, if you look at for the year, the EBITDA margins for the financial year 2018-19, they are better than last year. And as we move forward, the margins can only improve from what we have achieved, is what our considered view.
Order book growth has been impressive in the contract and manufacturing segment. Is this a one-off phenomenon, or do you see this being sustained going forward?
We feel that yes, we have got good visibility on the contracts and manufacturing division, and this is not a one-off kind of a thing. We have got couple of more years to show good growth in this segment also. And thereafter, maybe 2 to 3 years from now, this kind of a growth may not be sustainable, but still that will be good enough to show that the beauty of this backward integration model what we have.
Now, your sales have improved primarily in Bangalore, Chennai and Gurgaon in the quarter gone by. So what are some of the trends that you've witnessed, and what is the response that you're seeing to your new launches?
See, we continue to, literally speaking, perform as a leader in the Bangalore market, and in this financial year also we believe that we should be doing reasonably well. In other markets we still have lot to do better, but with the new launch in Chennai, with the new launch in Pune, and one new launch we are planning in the Kerala market, we believe that in this financial year the overall growth from the non-Bangalore market will be significantly higher than the Bangalore market, and from the growth perspective, we believe that this will help us to achieve a double-digit growth operationally in the current financial year.
How's the commercial rental space performing? Do you think the traction that's being seen currently can persist over, let's say, the next decade? How much commercial office space do you really have in the pipeline?
See, we have nothing as such from a commercial rental point of view. We have a 300,000 square feet shopping mall in Kerala, which has done well in the last financial year. But we do have a view based out of Bangalore, where 50% plus of our customers, they come from the IT sector, that the India's positioning in the services sector is incredibly world class, and looking at the vacancies which are negligible 3 to 5%, at least next few years the commercial lease space will continue to grow, which in turn gives us that confidence and comfort that our home demand pipeline is becoming better and bigger.
Sales traction in the residential space then, what's your expectation for FY20?
We feel that double-digit growth in the new sales we should be able to achieve in the residential space in this financial year.
Of the new project launches for FY20 looking like in terms of timelines, how's that panning out?
See, we had launched about 7 million square feet plus of new launches in the last financial year, and this financial year also we hope that about 4 million square feet of new launches should happen in next 2 to 3 quarters, and another 5 to 7 million square feet is in the pipeline, and hopefully that also one or two projects from that should also get launched as the year closes. So more than 5 million square feet of new launches should happen in this financial year.
Thanks so much for joining us.